Hello again. The yen looks certain to break through the 100 barrier against the dollar, but has so far failed to do so. I've been talking to Miles Eakers from Savi Trading about the Japanese currency, but we started by talking about the euro. Clearly we can't ignore what's just happened in Bratislava with the European Central Bank deciding to cut rates by 25 basis points. What does that mean for the euro? Where does it go from here?
It's quite interesting. I think there's a lot of market anticipation going into this. You get a lot of people saying, oh, the ECB are definitely going to cut rates, and the surprise for me was going to be on the upside if they didn't. They have now cut rates, which a lot of people will say should be bearish for the euro, but it's going to ease a lot of pressure on a lot of the banking industry. The problem is, and we've seen it a lot, that cutting rates doesn't necessarily stimulate growth. The problem is the lending, and the banks aren't lending to each other, and the commercial aspect either.
But from a currency point of view, right, traders will lose yield, if there was any anyway, with 0.75%. But at the same time, it could be perceived that at least Draghi's doing something. So does the euro trade above 130 or fall below 130 from here?
It's going to be interesting. I think had the US data continue to improve, I think we'd see euro a lot lower, which would obviously be very beneficial for German exports. Unfortunately, we've seen some US data disappoint, and now the focus comes into question as to whether or not the NFP is going to improve this Friday. I think if that does come out better than expected, I think we could see some further downside on euro. Against other FX pairs, we are eyeing obviously euro-yen. I think Kuroda came out this morning and made some comments that was obviously very bearish for the yen. But again, there's a lot of central bank action now, and we're waiting to see if the data can start pushing through and actually showing some signs of macroeconomic growth. Yeah,
what about the yen story? Because that was about as exciting as it gets for the forex markets. But suddenly the yen's just started to trade sideways. Is it a case that it's just going to trade in that range between 95 and 100 from now on?
I think obviously the psychological barrier that is 100 is going to hold for a while now. I think if we do trigger stop through there, we could see a big move on the upside. I think the psychology of the market got very excited about what had happened. A lot of the market was long. We saw some short covering on dips down to the 95, like you said. I think, as again, we need to see some signs that there's some inflationary pressure building up in Japan, because at the moment rates in Japan are still very positive. So for us, we are looking at data. I think that's the next thing. As much as the central banks do act, they need to start showing some signs of growth, or it could just be a bubble waiting to burst.
Yeah, sure. But in terms of profit opportunities, is it a case of looking at the yen crosses?
Yeah, I think so. I think we do need to see some more signs of growth in the US. I think that pushes dollar yen through the 100. I think you look at the central banks, you look at the geopolitical events, and they are causing a lot of volatility in the market. And rather than trying to trade a view, I think you look at the psychology of the market and how the market's perceived it, and then obviously trade in that direction.
So we've gone through the yen and the euro. Are there any other trading opportunities which you're eyeing at the moment?
We do like buying euro against some of the commodity currencies. I think the commodity currencies, if the US data does improve, will come under pressure. We are looking at cable. Cable's been a bit quiet. There hasn't been too much come out. We had the positive GDP, or higher than expected. So I think cable's the one that could potentially do some on the upside as well. I think sterling yen again is a good buy on dips.
Well, that's all for the moment. I'll be bringing you more interviews from the City of London next week. So for now, goodbye.